Ladies and gentlemen, good day and welcome to the TD Power System Limited Q1 FY2024 earnings conference call. This conference call may contain forward-looking statements about the company, which are based on the belief, opinion, and expectations of the company as on the date of this call. These statements are not guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. Now I hand over the conference to Mr. Nikhil Kumar, Managing Director for TD Power System. Thank you, and over to you, sir.
Good morning, everybody, and thank you once again for joining us on our earnings call. I trust all of you would have received our results and investor presentation. Moving on to the financial performance of the company for the quarter ended 30th June 2023. Standalone, our total income on the standalone basis for Q1 was 2.36 billion rupees versus 2.06 billion over the same period in the previous year, an increase of 15%. Profit after tax and comprehensive income for the quarter is 291 million versus profit of 194 million same period previous year, an increase of 50%. Order book of the manufacturing segment is 13.86 billion, which is 6.2 billion generator business and motor business, and 7.45 billion railway business. The projects business has been now classified as spares and aftermarket since we don't do any projects business anymore, and the pending order in this segment is 0.16 billion. And we have 0.09 billion from the Turkey business. The order inflow has increased by 16% over the last year, and the numbers as follows. Currently, the total order inflow in the first quarter is 2.37 billion rupees, and the previous year was 2.04 billion. Order inflow from
Ein Teilnehmer hat das Gespräch vorübergehend verlassen.
Ladies and gentlemen, we lost the connection for Mr. Nikhil. Please hold while we reconnect to it. We have the line of Mr. Nikhil Kumar connected, so please go ahead.
Okay, I will start from profit after tax. Profit after tax and comprehensive income for the quarter was 291 million versus a profit of 194 million same period the previous year, an increase of 50%. The order book in the manufacturing segment is 13.86 billion. 6.2 billion is regular manufacturing business and 7.45 billion the railway business. The projects group has now been classified as spares and aftermarket since we don't do any projects business anymore, and the pending order is now 0.16 billion. Turkey is 0.09 billion. Order inflow has increased by 16% over last year. The numbers are as follows. 2.37 billion for this year in Q1 versus 2.04 billion in previous year Q1. Order inflow from direct and deemed exports is 0.87 billion compared to 1.09 billion previous year. Order inflow in Q2 continued to be strong with 100 crores booked in July 2023 alone. Concall, our total income on a Concall basis for 2.24 billion versus 2.11 billion same period previous year, increase of 6%. Profit after tax and comprehensive income for the first quarter was 261 million versus a profit of 204 million, an increase of 28%. We continue to maintain a strong cash position of 2.13 billion. Order book, market situation and guidance. Market conditions and guidance. Overall, Order book was up by 16% as mentioned earlier. The domestic order inflow was higher by 58% due to motor orders and some large orders for generators from steel and agro in the domestic segment. Although export and deemed export is lower than Q1 last year, this was due to some big orders that are under negotiation in Q1. We are pleased to announce that we have won those orders in export and will catch up with the expected ratio of 55% export and 45% domestic by the end of Q2 or even perhaps in Q3. Let me now talk briefly about each segment. Steam turbine, we're seeing substantial increase of orders from both domestic and export in Q2. In particular, the domestic market continues to be very strong and the order pipeline continues to be very healthy. Here's the list of notable orders which come in Q1. We received an order from JAC Japan for 22.3 megawatt machine for a waste-to-energy project for installation in Naniya City, Japan. This will be the biggest generator that we're going to be supplying to Japan for installation in Japan. We received an order for 2 units of 48 megawatt and 3 units of 37 megawatt from major steam turbine customers in India for HRRL, which is a joint venture between Hindustan Petroleum and the government of Rajasthan for a refinery project. We received an order from Siemens USA for 2 units of 46.35 megawatt for installation in Guyana, South America, and with this, it's going to increase our global footprint to 105 countries. Next important order, we received an order for 110 megawatt suitable for a hazardous location, Zone 2 from Elliott, USA, for a project in India, which is for a refinery project in India, and this will be our first installation in India for a hazardous location in refineries. Gas turbines, we would like to announce an agreement signed with a major international gas turbine manufacturer for making 45 megawatt two-pole generators. We have an order to make the first prototype to be delivered end of calendar 2024 or early 25. This has a business potential of about 100 crores per year. This business will start in calendar 25. However, until then, we have a strong inquiry pipeline from our existing gas turbine customers. We're also happy to report another breakthrough order for 18.7 megawatt generator using CO2 for power generation from an Italian OEM. This is a startup funded by Eni, which is a large Italian company, and a few sovereign wealth funds of the Middle East. It acts like a battery storage during periods of excess power generation and discharges the power during peak demand. Once proven, we expect to have a number of these plants in the European Union. We are proud to inform you that the prototype plant is with the TDPS generator. Hydro. The order pipeline is very strong in hydro. This year we're going to be almost double last year, and next year we expect further growth. The incoming inquiries are very strong in EU, Nepal, and Southeast Asia. Recently, the Indian market for hydro is also picking up, and we're expecting strong quarters ahead for TDPS in the hydro segment. Gas engines, we'd like to report that this segment is going as per plan. There's steady growth as per the forecast. Motors. We have dispatched the first 40 megawatt motor of synchronous motor to the customer in Andhra Pradesh. Now there are about 75 crores worth of synchronous motor packages which will be finalized this quarter. Barring delays, we should get a significant portion of this business since we are well placed in price. Railways, our major customer has won the Train 18 aluminum frame train for 100 trains. These require about 275 crores worth of motors. Our customer will float the inquiries around October this year, and it should get finalized by the end of Q3 or early Q4. However, there is competition in this segment for one more player, and TDPS must compete to get these orders. In addition, we expect to get around 60 motors direct from the Indian Railways for execution this year. We will keep the market updated about this pipeline. To summarize, all segments are doing well. Our order inflow is moving up strongly. There's a full pipeline. As mentioned earlier, July was 100 crores, and the inflows for the current month and the future months are showing very, very healthy momentum. This order inflow will ensure that FY23 will go as per the guidance, and FY24 will also be solid and lead to further expansion of margins due to operational leverage. Guidance. For Q2, we're giving a top-line guidance of 255 to 265 crores for the manufacturing business, With this top line, we expect the PAT to increase significantly in Q2 compared to Q1 due to operational leverage. At the end of H1, we will be around 47% of the guidance for FY23. We are on target with respect to our guidance for the current year of around 1,000 crores as indicated in our previous earnings call on top lines as well as margins. This brings me to the end of my initial remarks. I'll now be happy to address any queries that you may have. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Himanshu Upadhyay from O3 Capital. Please go ahead. Mr. Himanshu, your line is unmuted. Please go ahead.
Yeah, hi. Sorry, I could not hear. I would first like to appreciate that we have started giving quarterly balance sheet in the presentation, and that's a good practice. One observation is this, that this quarter our revenue was lower than Q4 FY23, but our receivables are flat. It means that almost 40 crores of previous quarter revenue is still pending to be collected. Okay. What can we do to improve our receivable cycle? Okay. Yeah, so that was the first question.
Varalakshmi, will you take this question, please?
Ms. Varalakshmi's line got disconnected. We'll reconnect her.
Can I proceed with the second question then?
Yeah.
Yeah, see, the top 3 customers of ours contribute nearly 40% of revenue. One of it is railways, okay? And the other 2 would be for what segment? And generally, the top 3 remain same every year or they change every year? And what type of long-term agreements we have with them means? For the railway, we understand that you have a order book with your customer. For rest of the other 2, what type of agreements do you have with them?
No, we don't have a long-term agreement with the other 2, but have an extremely long-term relationship with the other 2. So the long-term relationship goes back all the way to 2001, when we started our company, and also both our customers started producing steam turbines in a bigger way in India, going up the sizes and increasing the market share. So our relationship with both these customers goes back all the way then, and we have grown with them, and we have built up a big reference list in India and outside India with them. So there is a deep relationship between our company and these 2 customer companies, and we continue to maintain these relationships. So I think that this is how I would like to answer the question.
Okay. And the top 3 remain the same only? What were there? Because they were
Yeah.
Okay. And can you give an idea of how is the pricing environment and any improvement there related to it? The gross margins have improved quite materially in the quarter. And the number of units we sold were less in the quarter. Was there some one-off high margin?
It's a mix. No, it's not a one-off. I say that we have been talking about the small expansion taking place in the gross margin. So this is mainly due to the mix. We're doing more spare parts business. We're doing more aftermarket business. We have been talking about increasing this part of the segment of our business, and this is leading to expansion of gross contribution. There is no price increases taking place in the market at the moment. The environment for the raw material is quite stable, and there is no reason why we should go into the market and demand price increases. So what we're seeing in terms of expansion of gross contribution is coming from the mix, looking more aftermarket business and the expansion in EBITDA margin is taking place due to the expansion in gross contribution as well as operational leverage, which we will now see happening in a bigger way in Q2.
So historically, we have stated around 32% of gross margin, 31, 32. Can it be now 35 or 34 new normal?
No, I think 35 is a stretch. So we are around, I think, 33, 34 should be, I think, the new normal.
And just the repetition means, is Varalakshmi there, that receivable question? That's all from my side.
I am there. So there has been a spillover of the collections to July. That's the reason why you see that the debtors position continues to be the same.
So is there, see, what I see is almost 40 crores of previous quarter's revenue, which is March ending, has not been collected till June end, okay? So more than 90 days of... is it a regular feature or this year only?
No, the collections have happened in July. It was in early July it happened. And, sometimes there are spillovers, but this is not the regular trend.
Okay.
Thank you from my side.
Relates to an LC. This actually relates to a large LC payment, which had a credit period, and therefore it has fallen due in the month of July, and they collected that money.
Okay. Thank you.
Thank you. Next question is from the line of Ashwani Sharma from ICICI Securities. Please go ahead.
Yeah, hi, good morning. Thanks for the opportunity. My first question is on the top line. If I look at top line growth, it was just 8% during the quarter. Hello?
Yes, you are audible. Please go ahead.
Okay, yeah. So I was saying that our top line growth was just a single digit, 8% growth. Is there a execution challenge that we are facing despite the fact that we have a good order backlog?
No, I think you should go back to my previous earnings call statement where I have clearly mentioned that Q1 is going to be 215 crores, and it is 215 crores as what I have told you earlier on the standalone basis. For the manufacturing business, and I mentioned that we have a large number of big machines which are being produced in Q1, which are going to be built in Q2, and therefore this is the reason why we're seeing unequal sales taking place in Q1 and Q2. It's quite normal when you have large projects that you could have larger billing taking place in the subsequent quarter. I've highlighted this in the last earnings call because I knew this was going to happen, and I expect that the investors are well informed about it.
Okay. So my second question is on the motor side. You mentioned, just want a clarification. You mentioned about 275 crore of opportunity for 100 trains. Is that what I heard?
No, I said 75 crores.
You said 75 crores.
I said the railways. I said our major railway customer has won the Train 18 aluminum frame Train 18 order for 100 trains. These require around 275 crores worth of motors. Our customer will float the inquiries around October this year, and it should get finalized by the end of Q3 or early Q4. This is what I mentioned.
So in terms of value, how much, what kind of opportunity do you see here, sir?
The value is 275 crore. We should get I think they will split 50-50 or somebody could get 60-40.
Okay. And my last question is on the margin. Again, if I look at last 3-4 years, there have been consistent, margin improvement which has happened. Where do you think? Is there a further scope for this to improve going ahead?
So I have mentioned earlier to Upadhyay who asked me this question a little bit earlier that the margin expansion now will take place mainly from operational leverage. and not so much from expansion of gross contribution. Gross contribution could be remaining at 33-34%. This is the new normal compared to 31-32% what we had earlier. Now, we are not in a position, the market is not conducive for price increases, and we also don't intend to increase prices because we want to remain competitive and we want to keep our volumes with our existing customers. So the expansion of margin will take place purely from operational leverage. And as we do around 250, 260 crores per quarter, compared to what we did this last quarter at 215, 220, then we will see correspondingly, you can see the expansion of gross contribution, the expansion of margin, EBITDA margin taking place because of that. And it will be quite significant.
Yeah. Thanks, Nikhil. Yeah, thanks for answers.
Thank you. Before we move to the next question, a reminder to the participant, anyone who wishes to ask a question may press star and 1. Next question is from the line of Rohit from iThought PMS. Please go ahead.
Hello, am I audible?
Yes, you are. Please go ahead.
Yeah, hi, Rohit.
Hi, Nikhil. Congratulations on a steady quarter. So, Nikhil, sorry, I think I missed some part of your opening statement, so please bear with me. I just wanted 2 things from you. In terms of the new addition, you mentioned about a gas engine customer that we've added. Can you talk a bit about this? Hello?
Yeah, this was actually this is a gas turbine generator which is being used in a CO2 storage power generation plant. So basically, what they use is they take CO2, they cool it, and they keep it under pressure during using power, and the power prices are cheap and low. That acts like a battery storage, and then during peak demand, that CO2 is then released into a turbine, and it drives the turbine to produce electricity. And then the cycle is repeated once again, and it's a closed cycle, so there's it's a very efficient cycle. And it's a new concept which is being tried out by this company, and it's based in Italy. They have very good funding and very good prospects for the future, and we are very proud to say that our generator is the first prototype plant will be the TDPS generator.
Well, very, very good to hear that. Also, again, I think you mentioned this in the opening remarks. So this railway orders, so you mentioned that this TV18 train sets, so we are going to participate in that? Because you mostly on the freight side, so are we also going to participate on the passenger side? Is that correct?
Yes.
Okay, so that was that's what you were mentioning. 275 crores worth of orders would be there, and we would participate depending on how much we win, 50 or 60, 40, whatever.
We don't know. We could get 0, we could get 50, we could get 60, but
right.
Yeah, we have to compete. Yeah.
And this would, if you win, then when will this start coming to you in terms of delivery?
It will start from FY2025.
25. Right. Got it. And the first one, the gas turbine orders, you mentioned that will be from calendar year 25, and it will be an annual 100 crore kind of an offer.
That's the first prototype plant. That generator will be delivered this financial year.
Okay.
And then the plant has to be proven. But it could end up being 15-20 plants per year in the future.
Understood. Okay. That's it from my side. Thank you. I'll join back in.
Thank you. Next question is from the line of Praveen Motwani from BOI Mutual Fund. Please go ahead.
Hi, Nikhil. Thanks for the opportunity. So my first question
Thank you.
what explains this decline in order inflow in the exports front in Q1 FY24? If you can just...
I have actually given an explanation for that. I have said that we had some big orders which were under negotiation in Q1, and we are pleased to announce that we have won these orders in export, and we will catch up with the expected ratio of 55% export and 45% domestic by the end of Q2. I've already mentioned this. This is the reason.
Okay, understood. And how margins are different in domestic and exports? Like, what is the spread?
Exports are slightly better than domestic.
Is there any number that you can share? Like,
it depends. Yeah, I can say it could be 100 basis points or 200 basis points better.
Okay, understood. And how is the inquiry pipeline in the hydro front in the domestic market? Because there are a couple of players announcing projects in the hydro. So if you can just give us some sense, when can we see that orders coming in?
Vinay, can you answer this question, please?
Yeah, so definitely the hydro market in the domestic segment has opened up, and we also received in the first quarter couple of orders, and we are also expecting some good order inflow in the second quarter as well. And definitely now I think this trend is going to continue. And after a long time, this hydro market for the small hydro segment has opened up.
Understood. Thanks. Those were the questions from my end.
Thank you. Participants, anyone who wishes to ask a question may press star and 1. Next question is from the line of Dhwanil Desai from Turtle Capital. Please go ahead.
Hi, good morning, Nikhil. Congratulations for a very good set of numbers. So my first question is, recently some of the major utilities announced very large MOUs for pump storage hydro. And if I understand correctly, our synchronous motors, are part of that solution. So you said that we won 175 crore orders and there is much more in the pipeline. So is this a very large opportunity unfolding? If you can talk a bit about that.
We have lost the connection for Mr. Nikhil Kumar. Please stay connected while we reconnect him.
You will be disconnected because the chairperson has not arrived to start this conference.
Ladies and gentlemen, thank you for patiently holding. We have Mr. Dhwanil Desai in the question queue. Mr. Dhwanil, you can please repeat your question.
Sure. So, Nikhil, my first question is around the synchronous motors. Recently some of the large utility groups have announced MOUs for the pump storage hydro. And if my understanding is correct, our motors are used in those applications. So can you give us some sense as to, on per megawatt basis, what is the contribution that our components get? And, whatever 75 crore orders that we got, is it related to the pump hydro? And, can this opportunity unfold, as a recurring thing over the next 3-4 years?
No, the 75 crores worth of synchronous motor orders are not related to pump storage at all. These are orders which are coming from the irrigation projects. So this is not pump storage. As far as pump storage is concerned, there's a lot of noise in the market about this. We're yet to see concrete inquiries in the ranges that we operate, which is up to 45 to 50 megawatts. So I'm unable to comment on the actual market size and demand at this point of time. It's got a big potential. We are waiting for it. We are all expecting something to happen. We have the products for it. And as soon as this market picks up, with actual ordering in these sizes, we will definitely play a very large role in this. But at the moment, as I said, nobody has really come to the stage of floating inquiries for equipment.
Okay, got it. And second thing, is on the railway side, you mentioned that, we'll be supplying 60 traction motors. So is that going to be FY25? Is that understanding correct?
This year. We expect to do it this year.
But this is part of the normal railway tendering, where the testing was going on for our product, right?
Yes.
Okay. Given all this development, I think even on the, so we have been, supplying to gas engine sides for a long time, but turbine generators is something which I have not heard from you over many calls. So is this something which is a new segment opening up, or something which we are doing earlier and now kind of gone into decline mode and now again reviving? Any update on that?
No, gas turbine has not been such a large segment for TDPS, although the market for gas turbines is large. We have been steadily increasing our presence in the gas turbine market, supplying machines to Solar, who is a big gas turbine manufacturer in the U.S. We also announced last time, the last earnings call, that we have increased that we're getting business from Mitsubishi, Heavy Industries from Japan. Those are also gas turbine generators. We're getting more inquiries and more requirements from them also. And then now and this one order from the CO2 plant, that is also a gas turbine generator. And now we're also, as mentioned, we have signed an agreement with a major international company for supplying 45 megawatt two-pole generator as a prototype, which will deliver by the end of next calendar year, early 2025. And then that business also has a big potential to grow. So the gas turbine business, we have a big scope for growth. We have a low market share, but it is a large market and it will continue to be a big market also in the future, given that the world is moving more and more away from dirty fossil fuels towards clean fossil fuels.
Okay. So our product is more relevant for less than 100 megawatt, right? So we won't be going above 100 megawatt gas turbine. Is that a right understanding?
So we are concentrating on gas turbine generators below 60 megawatt to start with. Okay. And above that size is we are not really competitive. Above that size, we have to supply generators with the Siemens technology, and we have restrictions on territories, so we're not going. We can't supply across the world. But below 60, we're free with our own machines, and that's the business that we're going after.
Okay, got it. And last question: so with all these things happening, do you have any line of sight in terms of FY25? How it's going to pan out?
Yeah, I think, if the order, it all depends. The order flow will give a very, very good insight about what's going to happen next year. So, if we are going to be running at, 250, 275 crores per quarter order inflow on the generator and motor side, then we should be looking at something like 1,000 plus crores coming from motor generator, plus we have the railway business on top of that. So I think it gives a good indication of the direction the company is heading. Of course, I can't give a commitment right now, but the way the order inflow is building up, I'm excited and I'm very positive about, delivering very solid growth next year also. And at the right time, probably also to talk about, once we start hitting this 1,200 crore level, we have also taken a decision in our board meeting yesterday to go ahead with an expansion plan. So we have taken the decision to invest 120 crores in a third plant, and we will be starting the investment from October this year. This will be spread over 2 years, and because we are confident about the order inflow, we need to beef up the capacity. So we should have the first phase of this plant operational around October to November next year, and the second phase will be operational in FY26. This, I think, is the surest sign for the market that we are confident about the expansion of the business, and they're getting ready for, taking the company to the next stage.
Okay. But your earlier indication of, current capacity serving up to 1,400 crore kind of a number remains, right? So this is over and above that.
Yeah, of course. But we are getting ready for, we can't wait until we hit that number and then start putting capacity. Yeah. So, we have to start the process right now. And we have taken the decision in yesterday's board meeting that we will invest 120 crores spread over 2 years and build up the capacity for taking the business up to 1,600, 1,800 crores.
Yeah, got it. Thanks. That's it from me.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants in the conference, please limit your questions to 2 per participant. Next question is from the line of Alisha Mahavla from Envision Capital. Please go ahead.
Hi, Nikhil. Good afternoon. Thank you for the opportunity. My first question is, we used to talk about refurbishment opportunity on the wind generator side. Is there an update on that? How is this segment doing?
No, it's a steady business. It's steady. It's not something exceptional, but it's exactly for the plan. We're doing a fair amount of business. Machines have to fail before. It's not we have to fail before we get an opportunity, but we're doing every quarter. We're doing some number of machines.
And we used to say that this could be a 100 crore kind of opportunity on an annual basis.
No, it's not going to be 100 crores per year. Not the wind repair. No.
Okay, so it is still significant.
The overall repair business, we have said the overall aftermarket business of the company would be around 6 to 7 or 7 to 8% of our total sales. This will be a part of it.
Okay, got it. And on the 9,000 HP locomotive side, we said that you're not sure what the OEM is planning to do, maybe source it in-house, maybe look for external sourcing. Is there any update on that?
No, there's no update. As I said, the inquiry will be floated in October, and we need to be competitive and get a big share. So I'm confident we'll do well, all I can say at this point of time.
No, I'm talking about the 9,000 HP locomotive. You're saying for that also it will be floated in October?
Oh, they're talking about Siemens, the one that Siemens won.
Yes.
No news. No, we haven't asked them, but they don't seem to be interested to outsource.
Okay, got it. And just on the gross margins, we used to say 30-31%. It is a competitive industry that we are in, and now we're saying 33-34 is sustainable. So what has changed? When you say the mix is changing, can you give some color to help us understand why this will be a sticky number?
The mix has changed in the sense that I said we're doing more aftermarket business. Earlier it used to be 2, 3, 4% of our sales. Now moving up to 7% of our sales. That was for the high gross contribution. That's definitely helping us to improve the overall gross contribution for the company. In addition to that, we have a lot of cost reduction activities within the organization. We are optimizing our design. We're constantly working on making our machines lighter, more efficient, and things like that. So that also helps in cost reduction activities on the material side and making our machines more efficient. So this and that, I would say, are the two major factors leading to the expansion in the gross contribution.
Got it. And just circling back on wind side, there's no big opportunity on the domestic side that we're seeing there currently?
We are talking to a few players, but I don't have anything to report at this point of time.
Okay, great. Thank you and all the best.
Thank you. Next question is from the line of Ranjit Shivaram from Mahindra Mutual Fund. Please go ahead.
Yeah, hi sir. Good morning and congrats on this set of numbers. Yeah, hi. So just wanted to get some idea, when we look across the companies, a lot of people are talking about the Europe market has kind of slowed down, and even when you see your export revenue is also, export order intake is also showing a muted. So is that something that you are also seeing, or it's just a quarterly thing, this export slowdown?
There's no slowdown on the exports. As I said, we were negotiating some large orders which we won. And when you see the Q2 numbers, you'll be rest assured that the export market is also booming for us.
Okay, great. And for the, I missed out on the initial point. Is there any guidance that you had given for the revenue for this year, FY24?
We are sticking to our revenue guidance of 1,000 crores.
1,000 crores. Okay. And order intake?
Order intake, I have not given a guidance. I don't have a number right now. I will give you, we can give a guidance next quarter.
Okay. And regarding our this Vande Bharat plans, I think we are expecting some orders from Alstom, or is that there in our overall outlook, the Vande Bharat?
Yeah, I think I mentioned this already, that they have won the order, they will float the tenders in October, and then we have to compete and win some part of the business.
Okay, and sir, lastly...
Sorry to interrupt, Mr. Sivaram. May we please request you to rejoin the queue? We have several parts.
Yeah. Okay, I'll do that.
Thank you. Ladies and gentlemen, in order to ensure that management is able to address questions from all the participants, please restrict your questions to 2 per participant. Next question is from the line of Sarika Thorat from Alchemy. Please go ahead.
Thank you for the opportunity. Sir, I want to understand, there is one media article in month of July saying that Karnataka High Court stays transfer of 2.51 crore shares of TD Power. Can you just throw some light on this particular matter, please?
Yeah, I think the company has published on the exchange clarifications as to what is going on. Matter is subjudice, so I'm not entitled to talk about this more than what has already been published by the company on the exchange. All I can say is that there was a hearing yesterday in the High Court, and the High Court has passed an order which we are waiting for the final document to come. But in general, the High Court has passed an order saying that the subject shares, which are 2.5 crore shares, are related to a single promoter entity, which is Sapphire Finland, and not related to other promoters. So this is a very welcome development as far as we are concerned. So this restricts the entire case to just one promoter entity and not to the other, and this does not relate to any other promoter shares. Once the notification is out on the website, High Court website today or tomorrow, we will put it up on the exchange and we will keep all our investors informed about the development. The next hearing for this case in the High Court has been scheduled for 28th of August, and we'll keep all of you informed about the progress.
Thank you very much for the update.
Thank you. Next question is from the line of Dipesh Agarwal from UTI AMC. Please go ahead.
Yeah, good afternoon, team. Most of my questions have been answered. Just few questions. Firstly, we were also looking to supply the traction motors for Vande Bharat to Indian Railway through one of our customers. Any update on this?
Yeah, that order we're still in the pipeline. We're not talking about it. It's going to take a little bit more time. So we'll not mention this, but there is opportunity to alive, and once it becomes hot, we will get back to you about it.
Okay, and fair to say there would be competition even for this?
there will be competition for all these smaller size motors. These larger motors which are going to the freight locomotives, that's where we have Alcom has a single source with that customer has a single source. But for these smaller size motors, there is competition with not a lot of competition, mainly competition from one single entity with a large multinational company working in India, and they're basically them and us to compete for these jobs.
Sure. And you were looking to also scale up the business on the motor and the wind repair. Can you give some color how the progress is happening on the wind repair side?
I answered this question a few minutes ago. The wind repair side, we're getting steady orders from this segment. We're satisfied with the overall growth. It's part of the 6-7% that we're going to do in the aftermarket business. It's going as per plan. There's nothing extraordinary taking place. There's nothing credible taking place. It's going as per plan.
Sure. And lastly, on the pumped hydro, how can we scale up on the pumped hydro? Any color if you can give?
I mean, scaling up means, they should first do business, right? And we should see the business before we say we're going to scale up. We have the product. We can make the synchronous motor and generators and whatever is required for this. So, as I said earlier, there's no actual project where people are in the ordering stage. A lot of it is very conceptual. It could be also in the first few phases, we could see very large projects coming up. So, say 200 megawatt, 300 megawatt, single unit sizes in pumped hydro, not in the sizes where we operate, which is 40, 50 megawatts. So, we don't know which way this market is going to develop. Is this pumped hydro going to be mainly for in the large hydro segment, in which case we will not have much business at all. If it's going to be in the small hydro business, then certainly TDPS will have a large role to play. Small hydro stops around 50 megawatts. So we have to see which way the market develops. We're not sure.
Sure. Thank you, and all the best.
Thank you. Next question is from the line of Manoj from Geometrics. Please go ahead.
Hello, I'm audible?
Yes, you are. Please.
Yes, Manoj, you are. How are you, sir?
I'm fine, sir. Sir, power has been a permanent demand of the human being from last many decades. So, and I have seen that power demand changes from like somewhere hydro, sometimes gas, and what do you see the trend in the short term and medium term, how the power producers are thinking in terms of which area they are more focusing on? And in general, when we read that in California, they are thinking that they have to reach so many power has to increase because of EVs and all these articles. Can you just throw some broad light what is happening on the areas where we are present or even not there, how the power producers are thinking?
So power is going to be in big demand in all over the world, not just in India, but also in the developed countries where they are switching over to more and more EV, EV production. Therefore, demand for electricity is going to keep increasing. Plus, bigger is going to be when they start heating. The laws are passed not to heat homes with oil or with gas. Then we'll see another big spike demand taking place in electricity. So the demand is going to keep growing. There's no doubt about it. How is the demand going to be met? It has to be met from a mixture of renewables and fossil. Fossil, as far as fossil is concerned, it's going to be gas. Gas is, at least in the Western world, all developed countries, it's going to be, mainly they're going to move away from coal. It's going to be large-scale gas generation and small-scale gas generation. And renewables. So renewables will come in the form of wind, biomass, garbage burning plants, waste-to-heat energy. This is a mix, you could say. In India, it's still going to be dependent on coal. Captive power plants is going to be coal or other fuels like biomass or sugar coal generation or things like that. But think the India story is going to be a little bit different. Although we are putting a lot of emphasis on doing more renewables, we can't escape the fact that we do need at least 60-70% of our power generation coming from base load capability. And base load can only be met by coal in India because we have no gas. So it has to be either coal or nuclear. This is how we see it in the future, so in the near term. So the demand for our products are going to be strong for the next decade or so.
Okay. Thank you and best of luck.
Thank you.
Thank you. Next question is from the line of Neha Agrawal from Sage One Investment Managers LLP. Please go ahead.
Thank you so much. I just have two quick questions. One is pertaining to the continuous replacement demand that you speak about in your presentation. So can you just highlight how much of the revenue is coming from the replacement demand side?
That's a quite tough question. I don't have a number, honestly speaking, on this at the moment.
Okay. But is it that even though it's a replacement demand, there is a tendering for it and that's the process, or is it more straightforward?
So Vinay, do you want to take this question? And maybe you can throw some light on this in a better way.
So basically, what we are saying is, we have around 6,000 machines in the field, and as you know, we are a 23-year-old company, and there are a large number of machines which are more than 10 to 12-year-old, and we expect a good amount of business to come from this segment for replacement of complete machine or complete rotor or stator. At the same time, there is also a big business for replacing the older machines supplied by our competitors. For example, now we are also bidding a project where there are 5 machines which are 60-year-old. We are bidding that project with one of our customers. That is one part. And second part is replacing our own machines. So, but unfortunately, this is an unpredictable market where, we can't say that, this year we want to do so many machines replacement. It is a bit tough question to answer, but certainly the probability increases as the machine grows older. So I think only this much we can tell at the moment because we have a large fleet of older machines which are getting older and older year by year.
Sure, but even then, would it be fair to say that even in that case, whenever there's a replacement demand also, there is going to be a fair share of competitive intensity, and it's not that, we are most likely to get the order just because the machine was ours earlier?
No, in the case of our own machines, the probability of getting the order is, you can say more than 90%, because it's going to be difficult for our competitors to match all the dimensions. There are so many things technically: the center height, the shaft diameter, the cooler location, foundation, dimensions, and all those things. It is, we are one of the masters in doing that, and we have replaced almost all our competitors' machine exactly matching all the dimensions. That is called drop-in kind of replacement. But there are, there is nobody who has this kind of capability who can match all the exact dimensions of our machines and offer a replacement generator. So there we have an edge over our competition. And as I said, we have more than 90% chance of getting that business.
Fair enough. That was very clear. Also on the Turkey side, I had one question pertaining to having a manufacturing unit there. So if you could throw some light as to which markets does it cater to, and given the recent disruptions in Turkey in the last 2 years, have we faced any difficulties?
The Turkish market is at the moment very, I could say, almost dead.
Right.
But we have decided to keep the plant open over there because we are keeping this as a safety security for our increasing population of machines that we have in Europe. So we want to have a service center. So in case we have a warranty issue, at least we'll have a manufacturing plant where we can offer the repairs and replacements at a very competitive price. Otherwise, we're dependent on service shops, third-party service shops, and they will It will be very, very expensive for the company in case we have an incident. Now, but we also have been talking to our customers in the Turkish market, and there is a big revival taking place in the geothermal side. And I will ask my colleague Ramya, who's on this call. She is still responsible for the Turkish market. Ramya, maybe you can throw some light on the Turkish market and geothermal, what people are saying. Is she on the call?
No, I don't think she's on the call, sir.
Okay. Vinay, can you just throw some light on the geothermal opportunity? What's happening with them in Turkey?
Yeah, so basically, the Turkish market, we were doing really good business, but off late, the government reduced the incentives. So now customers are, buying, that business has not gone from us. All the business what our Turkish plant used to get, those business we are getting in India plant directly. So, but now there is a change, and we are expecting, a couple of orders for geothermal business, which is now looking up again. And we may get a couple of orders for the Turkish plants, but not how it used to be before. So all those business are coming directly to the Indian plant, made in India machines.
But the geothermal market is going to pick up. That's for sure. We have spoken to our customers, and even if we get 5-6 machines a year on the geothermal side, with the large generators, and the Turkish operation is actually being very profitable once this market reaches even 5-6 machines per year. So we are already seeing inquiries coming in, and they started bidding. So the market will definitely revive. It may take some time, but I'm pretty sure.
So are we on the...
Sorry to interrupt, Ms. Agarwal. May we please request you to rejoin the queue if you have any further queries?
No problem. This is just a follow-up on the same question.
So you can rejoin the queue, ma'am.
No problem. Thanks.
Next question is from the line of Via Mehta from Equitas Investments. Please go ahead.
Thank you for giving me the opportunity, Nikhil. My first question is in terms of the independent railway orders which we have received. Could you enlighten more on that, and what is the scope going forward?
Sorry, could you just repeat the question? With Indian Railways?
So we have been, as you mentioned in your comments, that you have received some orders on CD Power as such without any partner, and we were in the trial phase and so on. So what is the scope there, and going forward, what are the opportunities that opens up for us, and what will be the size for the thing? How big?
The market is a 1,200 crore market, and it consists of approximately something like, I would say, 500 to 600 motors per year. So, sorry, it's not 500. It's about 3,000 motors per year. Sorry. So we are starting with 60, which is going to be the first you can say the first order that we're getting, and we're going to keep increasing the size of this business slowly. So we start at 60, then make it 100, 150, 200. Ultimately, the goal is to come to about 10% of the market, which is around 300 machines, which is around 100 crores of business. This is the goal. So 60 is a good first step, and we will keep gradually increasing our size as we get confidence producing this product, and also building confidence with the Indian Railways about our capabilities. I have always mentioned this will take a little bit of time, but 60 is the first big step.
And what kind of margins do we see here, and what type of competition?
It's a high margin product. So the key is to get to that level 2 or a level 1 qualification stage where then you get that price. The people who are in that level 1 stage are DHEL, Thomson Reeves, and Siemens, ABB. They are the guys who enjoy those high prices. We have finished the qualification. We also should get there very soon. But it will take some time for us to build up the volume with Indian Railways. I don't, at the it's going to be a step-by-step process, and we will get there, but we're doing it step by step, and we'll keep the market informed about this.
Got it. Thank you. And my second question is hello. Are you talking about CapEx? Actually, I just lost the line. Could you say more on that?
About the CapEx? Yeah, so I said that we have taken the decision in the board meeting to invest 120 crores in the third plant. And we will get this plant operational within, start in phase 1 within the next 12 months, 12 to 14 months. And it will start contributing towards, releasing some bottlenecks in the capacity in the second half of next year. With this full investment, we should be able to, after we finish phase 2 and phase 3, we should be able to produce 1,700 to 1,800 crores worth of machines. So we are getting ready for that. We are seeing that the order inflow and we're seeing the demand situation is I would say, compelling us to take these decisions to go ahead with the capacity.
Right. Our current facility were able to produce around 1,300 crores worth of revenue. So incrementally, the 120 crores CapEx would get us somewhere around 500 crores of incremental revenue. And on a full scale.
Yeah, you can say around 400 crores. We have 1:3, 1:3.5. So that's why I said around 1,700 crores or so.
Also in terms of the domestic orders, so which segment or which sectors do you see the orders grow majorly coming from for our product specifically?
Vinay, please take this question.
Yeah. Yes, madam, mainly the domestic sector is steel and then distilleries. Also the agriculture, agro products and chemicals and fertilizers. So we got some, very big orders from the agro company in the northern part of India, and we got some real big orders for the steel segment, and also the distillery segment is also booming, where we are getting good business, but all the sizes are small compared to the steel segment. But these are the segments which are really booming currently in the Indian market.
Got it. Thank you so much.
Thank you. Next question is from the line of Viraj from Simple. Please go ahead.
Yeah, am I audible? Hello?
Yes, please go ahead.
Yes,
yeah, so just had one query on the nuclear business, if we can just give some update.
We have one order for a nuclear power plant motor, which we have to deliver in October and November this year. And there are a number of new tenders coming up. So we don't have anything to report other than this, because it takes, all these things take a little bit of time. Everything in nuclear NPC is slow. Nothing moves fast over there. So there are new tenders. There are big requirements. We have nothing to report in this quarter.
Okay. But in terms of qualification, the whole certification approval process, we have already qualified, with all the major customers.
We qualified, that's why we got the order, but we need to deliver the first motor and put into operation. So as I said, I can deliver in October, November this year. Once we deliver that motor, then I think it will open up the business for us completely for more projects.
Okay. And is the focus only on domestic market, or even export is an area where we will be looking at? Okay, fine. Wish you good luck, sir. Thank you.
Thank you.
Thank you. Ladies and gentlemen, this was the last question for the day. I would now like to hand the conference over to the management for the...
Sorry, there was a follow-up question which was required, right? There was a lady who was... There was a follow-up question. Would that want to be taken right now?
I think she's not there in the question. We got that question from Ms. Neha Agarwal. Please go ahead.
Yeah. Thank you.
Yeah, Neha, would you like to have the follow-up question? Yeah.
Yes, thank you so much for the opportunity again. Just wanted on Turkey, when you said that there could be revival, but as of now, on a planned basis standalone, are we making losses in that unit, or we are break-even sort of?
Operationally, we are making profit, but there is an exchange translation loss Bhagalakshmi, can you please explain what happened in the last quarter on the depreciation of the lira and why we are showing the translation loss?
Okay, sir. So there is an operational profit from Turkey, but because of lira depreciation from 4 to 3, that is almost 25% depreciation, all the reserves have got restated at the current value, and this has resulted in a 1.5 crore of exchange loss.
Understood. That's very helpful. Thank you so much. That is.
Thank you. Ladies and gentlemen, this was the last question for the day. I would now like to hand the conference over to the management for the closing comments.
Yeah, thank you very much for participating on this earnings call, and happy to answer all the questions. If you have any further questions, please get in touch with us. We look forward to interacting with you in the next quarter, or we will see you in some investor conference in between. Thank you so much.
Thank you.
Thank you.
On behalf of TD Power System Limited, that concludes this conference. Thank you all for joining us, and you may now disconnect your lines.